How to buy a 5.634% agency mortgage-backed security with an explicit US government guarantee. Let's walk through this step by step today. Hello everyone, and welcome back to Markets with Marcus. We had quite a few requests over the past few days about how to buy individual mortgage-backed securities, or MBS, on Fidelity, Schwab and Vanguard after posting this recent Introduction to Mortgage-Backed Securities video, linked below for your convenience. So, with that in mind, here are the three topics that we'll be covering today. 1. What are the three reasons why agency MBS are attractive? 2. How can you buy individual MBS on Schwab? And what about Fidelity and Vanguard? And 3. What's our perspective on purchasing individual MBS? Let's get started. What are the three reasons why agency MBS are attractive? So, as we discussed in our recent Introduction to Mortgage-Backed Securities, or MBS video, again linked below if you need a refresher, there are three reasons why agency MBS are attractive. Do note that we will be using the terms agency MBS, government guaranteed MBS, and government backed MBS, or even just MBS for short, interchangeably throughout this video. Reason number 1. Agency MBS may pay attractive yields, for example, up to 5.634% at the time of this taping, on April 13, 2026. Reason number 2. Agency MBS are considered free of credit risk for all practical purposes, because they enjoy either implicit or explicit backing by the US government. Recall that the three agencies that issue the vast majority of government-guaranteed MBS include the Federal National Mortgage Association, or Fannie Mae for short, the Federal Home Loan Mortgage Corporation, or Freddie Mac, and the Government National Mortgage Association, or Ginnie Mae. Fannie Mae and Freddie Mac issue their own MBS and have an implicit guarantee by the US government only, meaning that while this guarantee is not explicitly written into law, there is a widespread market belief or perception that the US government will step in to support or bail out Fannie Mae and Freddie Mac if it's necessary. And they actually did so during the 2008-2009 Great Financial Crisis. Ginnie Mae, on the other hand, has an explicit guarantee from our country. This means that it enjoys the full faith and credit of the US government and guarantees MBS issued by private lenders instead of issuing its own Ginnie Mae MBS. Despite these technical differences, the markets generally treat all MBS from either Fannie Mae, Freddie Mac or Ginnie Mae, all agency MBS as they are called, as free from credit risk for all practical purposes, as I just mentioned. There are some non-agency MBS or private label MBS out there as well. You should know that these non-agency or private label MBS are not guaranteed by the US government in any shape or form and are not the types of MBS that we will be talking about today. Moving on now to reason number 3. The $9.2 trillion of outstanding agency MBS are the second largest asset class in the Bloomberg US Aggregate Index, the most widely used benchmark for the broad US investment-grade bond market. In fact, agency MBS account for 24% of the index total, behind only treasuries at 46% and slightly ahead of corporates at 23.9% if we combine industrials, financial institutions and utilities. Nonetheless, agency MBS may be more of a hidden gem than a mainstay investment for many retail investors. In part, this may come from their risk profile. Like all fixed income instruments with fixed coupons, they are exposed to interest risk, the risk that their price may fall when interest rates go up. And MBS cash flows and effective maturities are impossible to predict with certainty, as they depend on how fast homeowners pay back the underlying mortgages, what the market calls prepayment risk and extension risk. Again, Please refer back to our Introduction to Mortgage-Backed Securities video, linked below, if you are seriously interested in adding some MBS exposure to your portfolio, because it's important to understand the risk profile of any investment before diving into it. And for our VIP Investment Club members who are more interested in MBS ETFs and fund options rather than buying individual MBS, remember to check out this month's member-requested video. Jen posted it over the weekend, and she discusses which MBS funds may be more suitable depending on whether you are more conservative or more adventurous investor. You can find that video by clicking on our Mortgage-Backed Securities mini-series here on the left-hand side in our member zone. Now, there's another factor that may be responsible for the hidden gem status of agency MBS for many retail investors. Despite being the second largest asset class in the Bloomberg US Aggregate Index at $9.2 trillion outstanding, agency MBS are surprisingly hard to find if you're a retail investor and don't want to invest via a fund. Which brings us neatly to the next section of today's discussion. How can you buy individual MBS on Schwab? And what about Fidelity and Vanguard? We are going to begin with Schwab, as they probably have the best online offering for agency MBS on the market right now. Schwab has a dedicated MBS screener, which makes it easier to search and find the MBS that may be best suited for your individual situation. So, here we are on the account summary page that we normally see when we first log into Schwab. I'll click on Research in the top row, and from the pull-down menu, I'll click on Bonds, CDs, and Fixed Income. This brings us to this Bonds, CDs, and Fixed Income Yield Overview page that many of the Schwab regulars in our Diamond NestEgg community may be familiar with. Let's scroll down to the bottom where it says New Issues. And here we can see Treasury auctions, which some of you may know well, new issue municipalities, retail notes, and here I'll click on mortgage-backed securities. This brings us to this Find Bonds screen for mortgage-backed securities. I'll scroll down, and here we can see the list of agency MBS that Schwab offers online, from Ginnie Mae, Fannie Mae, and Freddie Mac. It's important to note that these are not new issue MBS though. They are secondary market MBS. To find a new issue MBS, you would actually have to click on View TBAs here. TBA stands for To Be Announced. Many, if not most agency MBS, begin their lives at what is often referred to as TBA, To Be Announced, forwards. These TBA forwards are what professional traders would consider the real new issue MBS, as they allow market participants to pre-position themselves for when the actual MBS comes into being or is created, so to speak, meaning before that MBS has been assigned specific mortgages for its portfolio. The TBA market is actually the most liquid, the most frequently traded part of the agency MBS market for large institutions. But you can trade them online on Schwab as well, to a certain degree. The offering for TBAs, the real new issue MBS, is not always plentiful. So, on that particular day that we were doing this tutorial, there was only one TBA. Some days there are even none. In addition, because these TBAs are essentially new issue MBS, when you can even find them on Schwab, the estimated total cost can be fairly close to the face value, as you can see from this TBA here, meaning that purchasing a new issue MBS may require significantly more capital than purchasing new issue treasuries and corporates. So, for purposes of this video, let's set the TBAs, the new issue MBS, aside and focus on our list of secondary market MBS here, which have already been established and have a defined set of mortgages in their portfolio. This is probably what most retail investors will generally think of when they want to start investing in MBS. Schwab sorts this list by the assumed yield to maturity, from the highest assumed yield to the lowest assumed yield. So let's walk through the secondary market MBS that's at the very top of this list here now. It's an MBS from Ginnie Mae, abbreviated as GNMA here, with a coupon of 7.5% and a stated maturity of December 20th, 2053. If you click on the name of the bond, you get to this screen with more details. For example, it shows that the coupon is fixed and that there is a monthly payment frequency. And if we scroll down, we can see that the first coupon was paid on January 20th, 2024. We can scroll down further for additional information as well. As the details confirm, the coupon is fixed for the life of this MBS. So you will always get 7.5% annualized interest on all outstanding mortgages in the portfolio. However, remember that homeowners will pay down their mortgages by a little bit every month. And if they want, they can also choose to repay additional amounts or even their entire mortgages early without any penalty. That's the prepayment risk. As a consequence, the stated maturity of an MBS is more of a legal formality than an actual maturity date. It tells you that all mortgages in the portfolio will be repaid by December 20th, 2053 at the latest. However, the outstanding principal will gradually go down over time even before that. And if the coupon is high compared to current market rates, like this 7.5% here, then it's probably fair to assume that many, if not most, homeowners will refinance their mortgage for a cheaper rate well before the maturity, meaning that most of the principal will be repaid much earlier as well. We'll get back to this basic thought in a moment when it comes to understanding how the yield and the total cost are calculated for this MBS. And one more side remark. As we said before, there are only agency MBS on this table, and they are all considered free of credit risk for all practical purposes. So the table doesn't show any credit ratings. Next comes the quantity. It simply shows the number of bonds used to calculate accrued interest and estimated total for that quote and price. If you want to see the minimum and maximum amounts available for purchase, you'll need to go to these min and max columns. Our Ginnie Mae bond here has a minimum of $5,000, which is not too bad by MBS standards. If we scroll down, we can see much higher minimum amounts on this list as well. For example, $50,000 for this other Ginnie Mae bond down here, or $25,000 for the Freddie Mac bond right below. As our Diamond NestEgg regulars know though, these minimum and maximum amounts are for the face value of the bond and not necessarily the actual cost that will be deducted from your brokerage account. So let's go through how that works for MBS. So we'll take the $5,000 face amount of our Ginnie Mae bond that Schwab took as the basis for the calculations, as we showed you before. The first step is to take the $5,000 and multiply it by the price of the bond, this 103.40930 here. This gets us to $5,170.47. 5,000 times 103.40930%. So far, this is the same calculation as for any normal bond. And this premium price of more than 100% here tells us that the 7.5% coupon of this MBS is a bit higher than current market levels. Rates down, prices up, as always in bond land. The next step is a bit different from normal bonds though. Remember, an MBS is a self-liquidating bond, so to speak, as the principal will be gradually paid back over time, starting with the first mortgage payment, and potentially even faster if there are prepayments. So, before we can determine the total cost, we need to find out how much of the initial principal, how much of the initial face value is still left in the MBS. Because, of course, you wouldn't pay for any amounts that have already been repaid by the homeowners before. And that's what this factor here of 0.17251869 tells us. That only a rounded 17.25% of the initial face value of the MBS are still outstanding, while 82.75% have already been repaid by the borrowers. 5,000 here times 103.40930% here times 17.25% means we only have to pay $892 for this MBS with a face value of $5,000. So, because of the previous principal repayments, we get quite a discount in this case. But, of course, it also means that our assumed yield to maturity of 5.634% only applies to the $892 in principal that we actually paid for, which roughly translates into an annualized interest payment of $66.90 and not the $375 we would have gotten on the full face amount of $5,000 when the MBS was first issued. And speaking about the assumed yield to maturity of 5.634%, this is the best estimate that Schwab could find for this MBS. It is in no way or shape guaranteed, but will depend on the future speed of prepayments, which is, by definition, unknown at this point. Schwab gives us 2 data points to understand the key assumptions behind the calculation, though. The first data point is the assumed average life. So, this assumed average life of 2.212 years means that 50% of the currently still outstanding principal should be paid back within the next 2.212 years. Or, in other words, if you buy $892 in principal today, you might expect to have only half of that, or $446, left in 2.212 years because of principal repayments. The second data point for the expected effective maturity of an MBS is the PSA, the prepayment speed assumption. It's 601 here for our Ginnie Mae bond, basically 6 times as fast as the standard benchmark of 100. Now, this high prepayment rate comes as no surprise, as the 7.5% coupon indicates that most homeowners in the pool should pay similarly high rates on their mortgages, which provides a strong incentive to refinance to a cheaper mortgage as soon as possible. And this high prepayment speed, by the way, may partially explain the high yield on this Ginnie Mae bond. You could say it includes a risk premium for potentially even earlier repayment. Let's look at the 2 final columns on this table now. The accrued interest of $3.59 here means that if you buy this bond today, you need to pay this amount to the previous owner for the interest payments that belong to them up to this point. It's the same mechanism as for any normal bond, and you'll get this amount back with the next regular interest payment. So, if we add this $3.59 to the $892 that the remaining principal is worth per $5,000 face value that we calculated a short while back, we get to $895.59 here. The estimated total cost that will be charged to our account if we buy $5,000 face value of this Ginnie Mae bond today. The estimated settlement date will be April 21st, 2026, so in 8 days from the time of this taping. Assuming that I want to go ahead with this purchase, I'll click on Buy here and make any required changes on this next screen. Then I'll click on Review Order. On the next screen, I'll verify the order details once more and do a final check that the estimated total cost of $895.59 is the same as on the overview screen. Schwab doesn't charge a separate fee for this online trade, but we can see here that the quoted estimated total cost includes a markup of $10. That's their way of making a bit of money here. In any case, the $895.59 are the same as on the overview page before. So I'm basically ready to click on place order and actually buy the bond. Now, I won't do this today, as this was just an example to walk you through the process. But you know now how you can place an order for an agency MBS online on Schwab. So, what about the other two large brokers that many of you in our community use? The bad news is that neither Fidelity nor Vanguard offer MBS on their online platform. It's really only Schwab where you can buy them directly from your screen. However, if you want MBS, you may still call your broker and talk directly to their bond desk. From what we hear, Fidelity in particular may sometimes have a decent offering of MBS available over the phone. But this may cost you a small fee extra for the personal service. Plus, even for Schwab, at least one of the offerings on our list from before is only available if you call them, as the little phone symbol in the action column indicates. So, now that you know how to buy individual MBS on the secondary market, via Schwab or another broker, let's move on to the next part of today's video. What's our perspective on purchasing individual MBS? As we've just shown you, buying individual MBS online from Schwab or over the phone from Fidelity and other leading brokers can be a bit more complicated than for more mainstream bonds. It may still be worth the effort though, if you are comfortable with the risk profile and are tempted by the attractive yields of up to 5.634% at the time of this taping, on April 13, 2026. Remember, if you buy agency MBS individually and hold them to maturity, they will always return your full principal and pay all the interest that is due to you, given that they are free of credit risk for all practical purposes. Alternatively, you can also buy MBS via a fund. Both ETFs and mutual funds can be easier to understand and faster to sell and buy, especially if you are buying smaller amounts. For our VIP members, please refer back to this month's member-requested video on MBS, ETF and fund options. You can find that video by clicking on our mortgage-backed securities mini-series here on the left-hand side in our member zone. And if you're not a VIP Investment Club member yet and want to join the daily member conversations on money, investing and retirement, whether that may be about MBS, covered calls, preferred stock, or treasuries and other types of bonds, and much more, visit our website at www.diamondnestegg.com and click on this yellow Private VIP Investment Club button to learn more and sign up today. Now, depending on the risk profile of the MBS ETF or fund in question, some may have similar yields to the individual MBS on this Schwab list here, while others may carry even higher, double-digit cash distribution yields. You may want to watch the video to find out how they do it and what the potential downside may be. Do note that past performance is not indicative of future results or outcomes. So please check to see what the latest numbers look like whenever you're watching this video, as they change all the time. Also keep in mind that with an ETF or mutual fund, you will always have less clarity and control, and it may cost you a bit more. Not to mention that the funds have no maturity and will never return your principal. You will always have to sell your shares at then prevailing market prices whenever you need your money back. As we often say here at Diamond NestEgg, everyone's financial journey is different. What other questions do you have about mortgage-backed securities? And what are you buying right now for your portfolio? Drop a comment below and let me, Jen, and everyone else know. Thanks for watching and see you again soon.